Hello traders, Gary Wagner here, 1:45 in Honolulu, 6:45 in New York on Friday, first day of March 2024, and this is the evening report for gold and silver, our weekend review. Traders, we have not seen a move with such a momentum on a daily basis since October of last year. This is the open of gold, opening roughly at $2,052, trading a little bit higher and then trading to the low of the day at approximately 2,048. It would rally to the first leg of the rally, which took gold to approximately 2,065, and then drop to this low here of $2,051.20. From there, we would see it climb $45 over the next few hours to peak out at its high today. And traders, when we look at a daily chart, in a way it looks even more impressive than the 5-minute chart because it is so clear that we had such a strong move once gold broke above the 50-day moving average. As I said, the last time we had a move of this size, this many dollars in a single day, it was a little more actually, was in October. This move resulted in about a $62 gain. Today, as you can see, when we look at the price in and price out, we opened at 52.80, traded to a low of 2,047, a high of 1995.70, and they are marking it out on the high, up $41 on the day, just below where I was anticipating the ultimate brass ring or goal, because 2098 is based upon the 23.6% fib retracement. And traders, that retracement is a quite long retracement because it really starts from the October rally here and goes all the way up to the record high that came in, the one that I always say, if you blinked, you missed it, because it ended within the weekend. And traders, when we blow up this chart and zoom in on today's activity, you can see yesterday, respectable, but no big deal. I mean, it was a day in which it gained about $12. But as soon as the market opened, it was just below yesterday's high and close, but it really, I believe, was the fact that it stayed above the 50-day moving average. And most importantly, market participants had a full day to weigh the PCE numbers that came in yesterday. They were supposed to come in exceedingly hot at 0.4%. They came in month over month at 0.3%. Not a big difference, but enough to convince investors that the Fed will act on their rate cuts sooner than they had anticipated yesterday, and really throughout the week, because we can see the sideways trading action on Monday, Tuesday, and Wednesday gaining little ground. The PCE comes out yesterday. We get a $12 gain. There was no fundamental event, no tick up in any kind of geopolitical attention that made a huge news cycle, at least from what I saw. I will review that, of course, over the weekend. But this one is a head turner because either something happened that many traders missed, or it was the combination of a lot of factors coalescing at all. Of course, it was fueled by the weakening of the dollar and lower treasury yields amid softening U.S. economic data. We'll look at the dollar in a second. But according to one article, February's data continued to show a decline in U.S. manufacturing, and the University of Michigan consumer surveys indicated a parallel weakness. Furthermore, recent data on Thursday revealed that the annual growth in U.S. inflation for January was the smallest in nearly 3 years, and New York Fed President John Williams recently expressed his expectations of an interest rate cut later this year, emphasizing the easing of inflation and robust economy, noting that the current economic conditions do not necessitate a rate hike. And so that would be an important point, because there was some concern of a pivot back to a rate hike that was alleviated by the statement from John Williams. So when we convert our daily back to an intraday chart, each candle representing 1 hour, we can see that there was a moment in time, a 3 to 4 hour period, when collectively market participants, traders, and investors thought about the news that occurred previously, added that to some data that came out today, and collectively moved the market exceedingly higher, finishing just $9 shy of $2,100 an ounce, resulting in a major breakout at the second half of the trading day. Lastly, we're back to a daily Henkin-Odyssey chart. My one hesitation today was remembering what happened last time we broke above 2,100 and then sold off as quick as it moved up. I am concerned that that, in fact, could happen on Sunday and Monday of next week. We will evaluate over the weekend and act accordingly. The dollar had some wild swings, meaning it traded to a high of 104.30 and then dropped in a very short period of time. But in terms of the net change on the day, it was in essence unchanged, so it didn't provide any strong tailwinds or headwinds. This was all market participants and market sentiment that moved gold and silver higher. Silver also had a strong day, not nearly what we saw in gold, but it hit right to the point that I want to see silver break above the 61.8% fib retracement at $23.40. A move higher on Monday. We will enter a long position. If we get follow-through buying in gold, we will buy the breakout, but with a very tight stop.
This has been Gary Wagner wishing you, as always, good trading. We will talk to you tomorrow for the next daily update and review. Bye-bye.